Honestly, I'm not sure if he's doing this on purpose or if he's just genuinely clueless on how to even navigate the market at this point. Because for a so-called veteran to say something this ridiculous, honestly, is unacceptable.
Here's a indicator, just RSI, measuring if we're oversold or overbought. On a weekly, again, we're at a low point that we haven't seen since the bottom of the last cycle when Bitcoin fell down to 15,000, when FTX collapsed. We are as oversold right now at 85, 86, as when Bitcoin was at 15,000 back in 2022, 2023. And the time before that was the COVID crash, when Bitcoin fell down to 3,400. And the time before that was the bottom of the 2017 cycle. And that was when Bitcoin hit 3,000. We haven't seen this kind of oversold level for a long time. And this doesn't happen very often. Sometimes it's years. It's almost like this is the bottom of crypto winter. That's what this is equivalent of. The last two times was the bottom of crypto winter, 2019, 2022.
Okay, let's just see and check the charts to see if that's actually correct. You see this line right here, the darker line? That's the line that whoever posted it drew on. The dotted line right here is the 70 and 30, which is the, oversold or overbought. Okay, and this is on the weekly. Notice the key point to make sure that this is the same line that he drew is this pivot point right here. You see that line where it tags it? That's where I matched it up right here, which is right there. You see that? Right here. So as long as this is tagged, most likely this is the same line. Dude, the same as the bottom of 2022 crypto winter. From what I've seen in the charts myself, usually when you enter a crypto winter, you at least tag the 30 on the weekly RSI. Did we tag 30 on the weekly RSI? No. We basically went down to 36. You at least have to tag the 30 in order to... Dude, back in 2022, the bottom of crypto winter, we pierced it, dude, on the initial flush. Right here. See that? So how the heck are you going to share a post that drew an arbitrary line saying, oh yeah, we never been this low before? Dude, are you kidding me? Dude, once you enter the crypto winter, you tagged the 30, dude. Even back in the previous one, dude. Back in 2019. You tagged it. You didn't pierce it like we did back in 2021, but you at least tagged it and slightly went below it. Did we tag it before? No. These people who chart these things, dude, which is why you really need to review the charts yourself. Just because they draw some stupid ass line saying, oh yeah, we never been this low before. We're in the bottom of the crypto winter. Dude, if this literally is the bottom of the crypto winter, this will be on record the shortest crypto winter ever. The fact that a so-called veteran is saying something this ridiculous, like what?
Death cross. But the last two times...
Yeah, you guys could see it if you guys want, but he repeats this over and over again. The death cross. Oh yeah, the last 2-3 times we got the death cross, we got to bounce. Like I said, that's during the freaking bull run, dude. Are you kidding me? Man, just pointing out the death cross and saying that, oh yeah, this is the bottom, blah, blah, blah. No. You can't just only show the bull run, which only fits your narrative that way if you only mention the bull run and not mention the death cross that happened back in 2021, which was basically the beginning of the crypto winter. This is insane. And not only that, even big names like Charles is saying that apparently initially he said we were going to hit 200,000 Bitcoin by the end of 2025. And now that it didn't happen, apparently he's changing it to 2026.
Originally, Charles Hoskinson was predicting a 200K, 250K Bitcoin by the end of 2025. He has just updated his perspective for end of 2026. And he says kind of what I've been saying in this video, that the fundamentals of the past year are the same, plus so much more in the future. Yes, there's uncertainty right now. There's a dip worth buying, but there's really no reason to think that Bitcoin, Ethereum, Solana, Cardano, quality cryptocurrency assets won't trend up. Listen to him say it, listen to the pushback, and listen to the response.
Oh, well, the markets go up and down, and crypto's not immune to the macro. We're still dealing with issues from the tariffs. We're still dealing with a great degree of economic uncertainty. Just this year was a little lackluster, but overall, I'm still very optimistic in the next 12 months. I think we'll clear most of this downside the next 2 quarters, and we'll be back up to $250,000 Bitcoin by the end of 2026.
Okay, so 2 quarters you think it's going to...
That is insane. 200,000. Just to give you guys a perspective, you guys can watch the rest of this, but I'm not going to because I already lost enough brain cells watching that crap. Yeah, just to give you guys a reference of what that literally means. current Bitcoin market cap is at 1.75 trillion. In order for it to get to 200,000 at current levels, you literally need over $2 trillion to pump into Bitcoin to pump it up to 200,000. Where in the heck is that money going to come in from? That is insane. Dude, and all these people saying that, oh yeah, liquidity's coming back because the TGA, Treasury General Account, is, back at $1 trillion and liquidity is about to come back in and, we're about to go into QE. That is just ridiculous, dude.
Follow me here. We move now to the TGA, Treasury General Account, and this is massively important. I've mentioned this before, but the simplest way to think of the TGA is the US government's checking account at the Fed. Every dollar the government handles flows through this account. Taxes go in, government spending goes out. So here's the key dynamic to that. The TGA goes down, the government is putting liquidity back into the system. They're paying bills, funding programs, and releasing money into the real economy. And when that money hits the system, bank reserves go up, deposits rise, and the early signs of M2 expansion start to appear. This is exactly how 2020 worked. Remember the stimulus checks? The checks first showed up in the TGA before they even hit your mailbox. When the Treasury released that money, M2 exploded, and crypto followed instantly. Really the same story in early 2021. TGA drawdown, M2 expansion, crypto melt up. Just look at the 2021 TGA drawdown and look at M2 going parabolic. So here's the connection you and I should pay attention to. QT ending removes the pressure, while TGA outflows add the push. That's the moment.
As the push. Yeah, liquidity's coming back, right? Here's where his argument basically falls apart. Okay, first of all, I'm not a TGA expert, but whenever they actually use the money, it's not like the entire 100% portion of that money is going to go into the banking system. No, they still have to use that money to pay interest on their freaking national debt, pay freaking federal workers, pay the freaking programs and all that stuff that the government provides, right? But even if they pump the entire, let's just round it up to $1 trillion in that TGA account straight into Bitcoin, do you know with current market cap and current price right now, even if that entire account and the government just comes out and say, you know what, we're not going to fund any of our programs, we're just going to YOLO this money into Bitcoin. Even if they pump $1 trillion into Bitcoin and bring the market cap back up to 2.75, it literally only brings it up to 138,000. 138,000, not 200,000, 138. Literally from previous all-time highs, is basically a 10% pump from previous all-time highs. Whoop the effing do. 10%, really? All this BS narrative of people saying, don't worry guys, liquidity's pumping back in. And the other argument that this particular guy says is that the fact that the PMI, producers manufacturing index, or whatever that is, has been in contraction for several years. And because of that, he's expecting the PMI index to go back higher, which means, the economy's going to boom again. I'm not sure if you've been paying attention to what's happening to the economy, but I don't like it. And the probability of us actually the fact that we're trying to avoid a recession by preventing a market crash, and the fact that we can actually potentially go into a recession if the market actually corrects or even falls even further, that's scary. But either way, this whole narrative about, TGA account being at 1 trillion, and that's the reason why liquidity is going to come back up to a certain level, yes, liquidity is going to come back up. And not only that, when he compares the previous 2020, 2021 pump that we got, dude, the major difference between then and now is the stimulus packages that we got, dude. What reason does the Fed have in order to even pump the market in the first place? Are we entering a recession? Well, according to this, no. Second quarter GDP was growing at 3.8%. So what reason do they have to pump? Is the labor market cracking and falling apart, shooting past, 6-7% unemployment rate? No. Last time I checked, it was at 4.4%. We're not even at 5% unemployment rate. So labor market is not cracking. Economy is apparently booming, even though apparently like nearly 50% of GDP growth is accounted for, AI spend, which by the way is also scary because some YouTubers are saying that is because of debt. But once that cash flow stops, holy crap.
Bucko over here, literally Bucko capital bloke, writes, David's saying the quiet part out loud. This administration has made some catastrophically bad economic decisions, and he's right. They back themselves into a corner and cannot afford to go backwards on AI. This is in response to a David Sachs tweet, which says, according to today's Wall Street Journal, AI-related investment accounts for half of GDP growth. A reversal would risk recession. We cannot afford to go backwards. Full article. In other words, if we stop seeing this AI spending, we could end up seeing a recession right here. A reversal could risk a recession. Okay, great. But if we're relying on AI for not going into a recession, then what we're really saying is we're relying on debt. Because in the last 3 months, all of this AI boom has been funded by debt. And that's really scary because Ray Dalio put it really well. He did this like 10-minute segment with CNBC. I'm gonna save you the time, okay? Basically, the last like 30 seconds are all that matters. And he's like, well, yeah, we're definitely in a bubble, but you know what it takes to make a bubble pop? You gotta prick it. And you know what pricks the bubble pop? People dashing for cash. I can't do a Ray Dalio accent.
Dashing for cash, which also, dude, like I said, the liquidity problem that we're literally facing in the private lending sector. I mean, that seems like people dashing for cash for me. And some people would say, the cash flow is what's actually, pumping up the AI spend.
This is not 2000. Why this is not a replay of the dot-com crash. Number one, the investment in capex that you're seeing, the billions and billions of dollars of investing into AI is coming from free cash flow, from money actually being generated by these companies, not from loans, not from...
See, that's the thing. Some people are saying that it's from free cash flow, like Tom Nash. Some people are saying that it's from debt. But if you've seen the balance sheet on Oracle, yeah, that actually looks like crap. So I'm not sure about the other AI plays, but Oracle-wise, yeah, they're definitely building it out with debt, dude. That's just insane. So yeah, the way I see it, just to give you guys my perspective of what I see in the charts, the fact that we already got a weekly weekly close below the 50 weekly moving average, 2 weeks now, that was pretty much the final nail in the coffin for me to confirm that most likely the cycle top is already in, and the cycle top happened in October. So unless, and the only way I would actually flip on that and become bullish is, number one, we have to rally all the way back up and at least negate the weekly and monthly topping tail that we got in August. Right here, that's the weekly topping tail. And the monthly topping tail, we need to negate that. So we need to get a weekly and monthly close above this pink line, which is around 124,520. If we don't get that, I'm remaining bearish, and the pumps or the bounces that we're getting, I would actually sell. But not financial advice. I probably should have said that in the beginning, but hopefully it counts now. But yeah, this is getting very dangerous. And as for me, where I would actually accumulate for the long run, and by long run, I mean like at least 5 years or more, I will start accumulating here around like 75,000. That's where I would begin to buy, but not all in. No. If anything, if all this works out, we actually might hit the 200 weekly moving average, which currently right now is around 56,000. Okay. And the only way I would see us getting to that is if we get a weekly close below the 100 moving average. Because if you look at the history, dude, in order to get rid of that, once we got a single weekly close below the 100 weekly, we saw further down move historically. I mean, who knows what will happen this time? Like, for example, back in 2021, once we got that single weekly close on the 100 weekly moving average, we saw an additional downside from that close of about, 54%. And back in 2018, once we actually got that 100 weekly close below it, from that close, we saw an additional 38% downside. Actually, no, was that 38? Hold on. From here to here, about 42% downside. Back in 2013, when we saw the initial pump and got that weekly close below it, which basically happened technically right here. Once we got that close, we saw an additional 50%. So once we get that weekly close below the 100 weekly moving average, most likely there's probably an additional downside from, I would say, anywhere between 30 to 50%. But because the market cap of Bitcoin right now is a lot bigger, maybe the downside move isn't as big. So my major buy target for Bitcoin for the long run, and like I said, not financial advice, would be a retrace back to this bullish channel. Because usually when you have such a long consolidation phase of a bull flag like this, it's not uncommon for the price action to pop up and then come back down and retest the upper band of this channel before making the bigger move. But we never retested this. So maybe we'll be getting the retest now. And I'm not the only one who actually thinks that. But I mean, listen to Ben Cohen.
What usually happens first, near the end of a cycle, is Bitcoin will fall below the 50-week. And after it goes below the 50-week, it then goes to the 100-week. And then after the 100-week SMA, it then tends to go to the 200.
Yeah, so he repeats this, but you guys could watch this. But yeah, I actually do agree with it. And because the other candle, technicals that we're getting, weekly topping tail that never got negated, monthly topping tail that we literally got in August, and almost got another one in October, which is the same topping tail we got back in November 2021. Okay, there's just so many signals that are flashing that is saying, to me at least, that the market cycle top is in, at least for Bitcoin. So, I mean, that's my game plan, not financial advice. I'm in a swing long position right now because I'm expecting a bounce in Bitcoin. But if we get a weak bounce from here, dude, look at what we're forming right now. Anybody who actually knows technicals, dude, if we get a weak bounce from here and just peter out around like 110, 112,000, that is a massive head and shoulders pattern. Shoulder, head, shoulder. Who knows when this other shoulder is going to, form. And the measure move, depending on where it breaks the neckline, bro, extreme bearish scenario, we might even tag 40K. The lower end of this bullish channel. That's scary, dude. Anyways, hope you guys enjoyed. Be safe out there. And if you guys actually want to save somebody who you know from making a huge mistake, share this video, guys. Seriously. And leave a like and subscribe. And I'll see you guys in the next.